I want to show you guys how to identify key levels, but not only that, I want to show you guys how you yourself can incorporate key levels into your own trading strategy. Because it doesn't matter whether you're trading Forex, whether you're trading stocks, whether you're trading crypto, all markets react the same at certain levels, okay? So I just want to show you guys quickly how you can use key levels and how you can identify them and incorporate them, okay? So the first thing I want to take a look at is the sensitivity, okay? So when you're identifying the key level, you want to understand sort of the size of the move coming off this level. So here, this is the 4-hour time frame, guys. You can see in this area we had a fairly strong move to the downside on the 4-hour time frame. So that's a pretty significant move. So this is definitely a level you want to be sort of aware of, because sellers came into this market at this time and created a pretty strong move to the downside. So sellers are interested in this area when we do push back up to potentially reject off this area and push back down. Okay, so keeping that in mind, when we do strongly break to the upside, this is indicating that these sellers are no longer interested in this market. So now when price comes back to this area, once we reject, we can look for a simple long trade, okay? So the next thing I want to cover is emotions, okay? And sort of the retail emotions. So looking sort of just over here, looking at this area here, you can see we had a strong move to the downside, okay? So if you think of the retail psychology, everybody is going to be scared when you sort of come back to this area. Because remember, guys, these are areas, not a specific price point. So you can see here we had a significant move to the downside here. So when price is pushing back up to this area, people are going to be wary because sellers were sat. All the buyers are going to be wary because sellers were sat here previously. However, once we break above and take out all of these sellers, when price comes back and rejects off this area, we can take a simple long trade. I'm not going to talk about a lot of strategy in this video, but I just want to sort of show you guys how I identify key levels. So you want to look at sensitivity and the size of the move off the level. That indicates significance. And then you also want to look at the emotions, okay? Because you want to know how buyers and sellers are feeling in certain situations. Like here, the sellers were very strong. So when we come back to this area, there's a potential to reject again. So clean buys are once we break above, come back and reject, and then we can continue up, okay? So understand the emotions. The next thing I want to talk about is psychological numbers. And a lot of traders have the psychological numbers wrong, okay? They think that it's like 129, 128, and sort of that, and like that. But actually, psychological numbers are 130, 125, 125, just down here, just around this area. Basically, it's every 500 pips for Forex anyway, because the ones in between, like 126, 127, 128, they're not as important as the solid whole numbers like 130 and the middle number, which is 125, okay? You can see clearly 130 was hit the other day, and then we had a sharp move off 130. 125 orders were collected here to create this whole up move, okay? The psychological numbers that you want to incorporate are 125, 130, 135, etc., okay? You don't want to have lots and lots of lines on your chart. You want to keep it fairly clean, fairly simple, after identifying your solid key levels based on naked price action, okay? The next thing I want to show you guys is actually an indicator which can help you identify these key levels without doing sort of as much work. Okay, so the indicator is called swing level. Sorry, the indicator is called higher high, higher high, lower low, live. Okay, so that's the second one down here. I'm going to store it for you guys. And then once you've applied the indicator, what you want to do is double tap the indicator, put your zigzag period up to 16, and then you want to remove the zigzag, okay? So once you've done that, what this will do is simply identify the key swing levels for you and show you guys the sort of key levels, okay? So you can see here we have a key level, up here we have a key level, here was a higher high, and also a high here. So that's also a key level. And then you can see also this region here is a key level, and then down at the bottom. Okay, so very simply using this indicator, you can easily sort of identify key levels, and then sort of that way you can then use that with your strategy. Okay, so that's 4 ways to identify key levels: using sensitivity and size, using emotions, using psychological numbers, and then also using this indicator, which is also very helpful. Remember guys, don't just use key levels on their own. You want to build a story and a reason why you're using these key levels. Okay, so that's it for this video. I've had a lot of sort of questions on, can you do a video on key levels? So this is it guys. I hope it's helped a lot of you guys on identifying them, and then I will see you guys in the next video. I forgot to mention, please like and subscribe and let me know if you found this video helpful. So I'll see you guys soon, and I hope you guys enjoyed it.